If you don't find a way to make your money work for you, then you're going to work until you die. Pilots know, and so do you, that if you're going to fly an airplane in a headwind like this, it's going to take you longer to get to your destination. What a pilot sometimes will do is change the environment in which they fly the plane. That environment is nothing more than operating in an environment where the plane is more efficient without having to work any harder or try to go any faster. And that would be putting a tailwind behind the plane. And if you know any pilots, they love flying with a tailwind behind their plane. And you love it too because you get to your destination faster. Imagine if you could change the environment in which your money operates, just like a pilot can change the environment in which their plane operates. Money works a similar way. And in order for your money to operate in the most optimum environment, you got to face some of the headwinds that you're going to have, like inflation, low interest rates, bad investments, slow growth, taxes, no liquidity, and lack of control of your money. In order for your money to operate with a financial tailwind, we got to change some things. We got to change where the money goes first. We got to change how that money operates, and we got to change what you do with your money, which is going to be easy, but very difficult because your mindset and everything you've been taught about money is probably not conducive of a financial tailwind. So let's talk about some of those different things in which your money needs to do. First off, and probably one of the most important, you need to be in control of your money. If you spend your whole life giving up control to everybody else, how are you going to take advantage of opportunities? And how is your money going to work for you when somebody else is in full control of that? Who's that somebody else? Banks? Wall Street? The financial advisors? Look around. Where's your money sitting? The other thing, we want to have our money operating in a tax-efficient environment. Or, I like to say tax-free. So when you make money on your money, are you paying tax on that? Is your tax deferred? Are you paying tax every single year on every single penny you make? Because if you are, your money is eroding before you're even having a chance to allow it to build. Uninterrupted compound interest. Albert Einstein talks about compound interest, and he says it's the eighth wonder of the world. He says it's the most powerful thing in the universe, and he says those that understand compound interest earn it. Those that don't, pay it. What side of that one are you on? Are you paying compound interest, or are you earning compound interest? You need to be earning compound interest on every penny of your money, which is more complicated because of this number one word right here, uninterrupted. That means you need to have access and control of that money while it's still earning interest. That's tricky. You need to have low to no risk, because if you have risk, your money could evaporate just like that in the markets, in investments. If you have low to no risk, your money, even though it may not make as much, will continuously be working for you, and you won't have to ride the crazy roller coaster rides. And trust me, I know a lot about those. Passive income. You need to make money while you sleep. You need to find ways for your money to work for you instead of you always working for money. Your whole life, you've been taught to just go out there and work and trade hours for dollars. We got to change that. The wealthy don't do that. They did it until they learned that there was a cap on how much money they could make, and then they figured out, I got to work smarter. And what does that mean? Their money has to work for them. If they keep working for every dollar of the money they make, they're going to work until the day they die, like Warren Buffett said. But if they make their money go out there and work for them, there's no limit to that. So your money that you worked for needs to then go out there and make money for you. Your money needs to make money. Does that make sense? Every dollar you make, that money should be put to work to actually make additional money for you. So then you put this money somewhere, and then that money pays you back more money. And you also need multiple sources of money. If you only have one source of money, what good's that going to be? What happens if an event happens like COVID or the Great Recession or the dot-com crash, and that source of income that you had that you were so reliant on goes away? If you had multiple sources of money, your money just keeps paying you more money. And then that money hands you more money as well. Each time there's more money coming at you because you have multiple sources. So if one stops, another one continues. If another one changes or reduces, there's an additional one coming in giving you more money. You see, if you have multiple sources of income, number one, you'll make more money, you'll be able to save more money, but also you'll protect yourself in case something happens. And you know what? Something always happens. So where is it that I can put my money where I have all this happening? Where is it that my money can operate in this environment with this financial tailwind? Well, there is a place. And it's not some brand new thing that we came up with. The wealthiest families have known about this for hundreds of years. And they've used this. Who are those families? Well, the Rockefellers, the Rothschilds, the Morgans, the Stanleys, the Walt Disneys, the Ray Krocs, all the way up to the Bidens, the McCains, and on and on. If they all know about it, why don't you? Why don't we know about the same place that the wealthy put their money? We do, but we don't know how it works. We think we know what we don't know, and that's the biggest problem in America. In America, the biggest problem is not what people don't know. The biggest problem is what people think they know that just ain't so. That's a Will Rogers quote that holds true today. If the wealthiest families know where to put their money, and traditional banks put more money in this place than anyone else, why aren't we doing the same thing? Well, walk into your bank and tell the bank that you want to put your money in the same place that the bank puts its money. You want to take your money and you want your money to be in the same place the bank puts their money. The bank will tell you they can't. That's interesting because this place that will allow all of this financial tailwind to happen is called the money multiplier. Money multiplier is a process. It is a process of moving your money, but before we move our money, we need to change one thing, and that's where your money goes first. We need to add one step to your process. Where's your money going today? Probably in a traditional bank. Probably in a 401k. Probably in somebody else's control. That's got to change. So where do the wealthy put their money? Here's the hard part. They put their money in a specially designed and engineered whole life insurance policy. Most people think that this vehicle, this whole life policy, only comes in one flavor. It'd be like going to an ice cream stand and saying, they only have one flavor of ice cream. Have you ever been to an ice cream place that only has one flavor? No, they've got 50, 100 flavors of ice cream. Well, whole life doesn't come in one flavor either. And you can take that flavor and you can put sprinkles on it. You can put it in an ice cream sundae. You can do all sorts of things. You can engineer that whole life policy just like you can engineer an ice cream. You can make it anything you want. But you thought there was only one flavor because that's what you've been conditioned and taught your whole life. And that's where the problem begins. But that's also where the answer lies. You see, this specially designed and engineered whole life policy, commonly known as privatized banking, allows you to earn uninterrupted compound interest on every penny, allows your money to operate in a tax-advantaged environment or tax-free if done properly. It allows you full control of your money, meaning you can access and use that money. And if you can use that money while you earn uninterrupted compound interest with no risk, because most of it is guaranteed, you can definitely take that money and deploy it to earn passive income. You can definitely allow your money to then go out and make money, because if you had control of your money and when you took that money, you still earned interest on it and you put it somewhere else, you're now making money twice. Why have one ice cream cone when you can have two? Duh! That's the secret. Not only that, if you know now how to make your money work for you and still have control of it, you can go out there and you can develop multiple streams of income. Why have one when you can have another and another and another and nothing changes? This is what the wealthy know. This is what you don't know. Because you've been lied to your whole life about how money works, and it's time to wake up. It's time to see what's really going on out there, and it's time to mimic what the banks do and what the wealthy do. Doing that allows your money to operate just like this airplane with a perpetual tailwind. How does that sound? First thing you got to do is get out of your own way. Stop listening to people that don't know what they don't know and start listening to yourself. Do your own research, do your due diligence, and learn about privatized banking and the infinite banking concept. And once you do, you will see that all of this actually exists. And all of this has existed for a long time. And the biggest problem is you thought this was too good to be true. And that's a shame. So now that we know that we have to change the environment in which our money operates so that we can have that perpetual tailwind. And now we understand we don't want to work any harder. We don't want to take any more risk. We really just want our money to start working for us. So how does that happen? First, it starts with one change. All of you have an income. And that income comes in from various sources, hopefully. Maybe it's just one source. Maybe it's a W-2 job. Maybe it's a business. Maybe it's real estate. It doesn't matter where that money's coming. What matters is where is it going right now? My guess is it's going into someone else's bank. Correct me if I'm wrong, but all of your income that you're making is probably going into somebody else's bank, which is okay if it's a stopping point. Think of this as like when you're doing a long drive and you got to stop off to one of those rest stops. You don't stay there. You're not like, I'm home. No, you stop, you get the business done, you get back in the car and you keep moving. Your money needs to keep moving. So what we want to do is maybe stop off here, but then change where your money goes after that. And we want to put that money in that machine, that vehicle, where you can earn uninterrupted compound interest. But it can't just sit there. Not just because this machine, that specially designed and engineered whole life policy, pays a guaranteed interest rate, plus it pays you dividends, but more importantly because it's going to pay you a guaranteed interest rate and dividends whether the money's there or whether you've used that money. So what we're going to do is we're going to move that money. Okay, this is your money in motion. So now that your money's in motion, we're going to stop off at that bank account again, and then we're going to move that money over here to whatever the desired place is. Now, what is the desired place? Remember, the rules that we talked about, we want our money to work for us. Our money needs to make money for us. So how do we do that? First, we would start and look at where is all our money going. You make money today, so where does the money go? Look at your checkbook. Look at your bank statement. How much of it is going to pay debts? How much of it's going to car payments? Where is all that money going? And if we had money in our own bank right here, the money multiplier, how could we make that money work the most efficient? So let's start with the debts, the credit cards, the lines of credit, and all those things where your money goes every single month and you don't get that money back ever again. Once it leaves your family, it's gone forever. And who gets it? The debtors. All those people that you pay money to. So the first thing we want to do is we want to start paying those debts off. And let's just assume that those debts are costing you 10 to 20% interest. If you have credit cards, that's certainly what it's costing you. If you pay the debts off, even if it's not all at once, we're going to snowball them and pay the lowest balance off first, and we're going to move straight down the line from lowest to highest balance. And as we do that, what we're going to do is we're going to take the money that you were giving to the debts, and we're going to then change the name on the check, and we're going to move that money, this 10 to 20%, we're going to move that money back into your bank. It's nothing different. You didn't work any harder for this, you didn't work any longer, and you took on no risk. All you did is went through a process where you changed where your money went first, then you put that money in motion, you paid off debts in a very systemized process, which we teach and we show you how to do for no cost. We pay them off, and then when you change the name on the check, you recaptured the money you were giving away. And then from there, what do we want to do? Well, let's look at the car payments. Let's pay the cars off and take the money you were giving to the car finance companies, and let's put that money in your bank as well. So let's say your car is costing you $500 a month, and these debts were costing you $300 a month. So now what we've got is we've got $500 from the car, $300 from your debts, all moving back into your bank. And remember, all the money you put into your bank, that specially designed and engineered whole life, that never stopped earning uninterrupted compound interest. Never once did your money stop working for you, but you're making your money work even harder. Then when all the debts are gone, what we do is we look at different investments. We look at different real estate deals. Maybe we become a private lender and we start lending money out. Now all of a sudden, our money's making money here, and then what we're going to do is we're going to be making money over on this side, and we're going to just take that money, and again, we're just going to keep moving the money from the real estate, from the investments, from the private loans, back into your bank, because this is what you're doing now. You're doing the same thing. You make money in investments, in real estate, in private loans, however you're making money. Where is that money going? Right now, that money's going in someone else's bank. And someone else's bank is capitalizing on that money. How much? 400 to 1,300% is what BauerFinancial.com says the banks are making on your money that you leave there. In other words, your bank is making 400 to 1,300% more than you are on the money you left there. Why would you want that? Just change where your money goes first. Put it in your bank instead of their bank. Then take all the money that you've made by your money working, the passive income, all these, and move them back into your bank. Your bank never stopped earning interest. And all this interest, the guaranteed interest plus the dividends, the money you made in your specially designed and engineered whole life is also tax-free if it's designed properly. But the best part is, there is a built-in legacy plan. Let's just say something happens and you get hit by a bus. Let's say that plane that was flying with that perpetual tailwind just went so fast that they couldn't miss that mountain and poof. you're off to a better place. Well, you didn't leave this planet, you didn't leave this life without obligations, without some responsibilities. You probably have a family. Well, when your bank was created, remember, it's a specially designed and engineered whole life. It also came with a built-in death benefit, or what I like to say is a built-in legacy plan. So when you leave this earth, unexpectedly or expectedly, you leave a legacy to your next generation. Why do you think the Rothschilds, the Rockefellers, and these wealthy families get wealthier every generation? It's because their money's always been in motion. It's because they've never not earned uninterrupted compound interest. But also, when one graduates and goes on to a better place, there's a windfall of money that comes into that family, usually into a trust, that then perpetuates that family's ability to do more of this. So in order for your money to work harder for you, without you having to go out and work harder for that money, without you having to go out and take on more risk, and without you having to go out and give up control of your money, what you need to do is figure out how your money can operate with that perpetual tailwind. That's what you want. But the problem is today, your money is operating with a perpetual headwind. And that headwind will keep you from growing any faster. It doesn't matter what you do. Your money's operating in the wrong environment. Change one thing, add one step, and that is where your money goes first, so that your money can operate in a financial tailwind. All right, if you like that video, make sure you check out this video right now. And also don't forget, subscribe to my channel, and don't ever forget to smash that alert button. We'll see you on the next one.